Can you become a millionaire on the average income in the United States? I think the results are going to surprise you. What's up, guys? Welcome back to Everyday Money. If you're a high income type of person, like let's say six figures several times over, like 2, 3, 4, $500,000, $1 million type of income person, I don't think it would be terribly hard to amass $1 million in either cash or in stocks or something that could easily be converted into cash. That type of income just lends itself to that if you can keep your expenses low and be able to save and invest quite a bit of money. And really, if you're up near the $1 million mark, you could probably just save $1 million if you wanted to lose a bunch of that to inflation over time. But can the average person in the United States making an average salary in a realistic time period come up with $1 million, either by saving it or by investing it? In this case, we're going to look at investing it through index funds. What I'm not going to look at is total net worth. Like, for example, adding up your house, your cars, all your investment accounts, all of your savings, every asset that you can possibly think of. What I want to see here is can you invest a reasonable amount of money over a reasonable amount of time and come up with an account that has $1 million in it. And the reason is because the vast majority of the United States is middle class. They're not making $1 million a year. They're not rich as most people would define that by. And they don't necessarily really want to start a business or work a part-time job after they work their 40 or 50 or 60 hours a week, or maybe invest in real estate and become a landlord and have to deal with all of the problems and the benefits associated with being with a landlord. They just want to go to work, come home, be with their families, watch football, crack a couple beers, basically the typical American dream. A lot of times people get away from that, especially on YouTube channels like this, where we are promoting high levels of success with, a job, a real estate empire, several different side hustles and such. And that's cool for us that want to do that. But, there's a lot of folks out there who just want to live the regular American life, and that is awesome as well. So let's take a look at how those people relatively easily, in my opinion, definitely can end up being millionaires in a reasonable amount of time. And to set the parameters for that, we have to look at what average income is in the United States. And now, according to the government, the average amount of money that a male earns in this country is $57,000 a year. That is the average wage amongst all of the people in the United States. The average for a woman is $47,000 a year. And now there's no way to really rectify that, I thought of, other than just averaging those two together for the average wage or salary or whatever, average take-home income of $52,000 a year. For the purposes of investment, we're going to be looking at index funds because I think that is one of the easiest things to invest in. You really don't have to do hardly any research into it. Once you've picked the fund that you want to use, the ongoing research is basically just matching whatever index that you want to track, be it S&P 500, a certain sector, a total market, whatever. And typically, the total market funds and the S&P funds return about 10%. So what I did was I tried to look at a 40-year period because I think that is a realistic estimation of most people's working careers when they're out of school, earning money, and then up to they retire. And I based that on the average or the earliest Social Security age that you can take Social Security at 62. So I looked at 22 to 62. If you wanted to look at when you're eligible for Medicare at 65, you could look at 25 to 65, but it really doesn't matter because over those 40 years, historically, you should be getting 10% average on your returns. So when you take that $52,000 amount that most people earn, and I just took a 10% amount of that you could take and put into investments annually for $5,200 a year, you would end up over those 40 years with $2.5 million in the bank. And that's insane to me, to be honest with you, when you start looking at the math of that over that 40-year period that you could end up being a multimillionaire with just earning the average wage right now in 2020, not adjusted for inflation. So you make that $52,000 for your entire life, and you can be sitting on a nest egg in 40 years of $2.5 million. Even better is if your company offers some sort of match or something to your 401k. A lot of places will do somewhere between like a 3 and a 6% match. But let's just say that they offer a 5% match and you take advantage of all of that you can. So you give them or invest 5% of your income. So that's only $2,600 a year, and they match that with $2,600 as well. You could end up with that same $2.5 million in your investment account at the end of 40 years by only investing 5% of your income, $2,600 a year, which is just a little bit over $200 a month. If you were putting it into a 401k, that would be pre-tax. So really your the net that you would see post-tax would be somewhere around like $150, $175 less on your paycheck than if you would have invested nothing. The only downside is that this takes a lot of discipline, and I'm going to go into how this can be discouraging to folks, because in the first half of this journey to your $2.5 million, you are going to be looking at an account that is not growing very fast because of the way compound interest works and exponential growth. You start out small and you work your way up to growth that is, almost straight up and down linear. So let's break down how this will look over the 40 years that you are going to have to hang on to this and be disciplined and invest that money every year of your working career. All right, so you've just started your job. They're going to pay you a sweet $52,000 a year, and that's all that you're going to get paid for the rest of your life. You open that investment account and you start investing 10% of your earnings for $5,200 a year. And after the first 5 years, you have contributed $26,000, but your account is only worth $35,000 because it hasn't had that long to compound. This is where the hard part sets in. This is the discipline, and you have to know that you're doing the work early now for the delayed satisfaction returns in the end, because your money is going to grow extremely slow at first. You're going to be tempted to spend it because you do have this money in the bank. Everyone else is out buying four-wheelers and ATVs and going on expensive vacations, but they don't have any money in the bank, but you do. You work this job and you work it. We're going to skip past year 10. We're going to get right to the halfway point. You've been doing this for 2 decades, 20 years. You've contributed $104,000 to this investment account, and it's still only worth about $327,000. Not a bad amount of money. You may be tempted to go out and purchase a vacation home or some massive addition, or you might think, well, I have another 10 years left on my mortgage. I could pay that off with this money. But you decide you're just going to keep it in that account. You're going to keep on rocking. At year 31, a short 11 years later, you cross the $1 million mark. You have contributed $161,200, and your account is sitting on a little over $1 million. And you're thinking, wow, that's great. And you're like, I should probably hit the like button to help this video out in the YouTube algorithm while we continue to invest our money. 4 short years later, at year 35, you've contributed $182,000, and that account is now worth $1.5 million, and you're really starting to see the acceleration of that compounding interest and that exponential rate of growth. And so you're staring down 5 years until retirement. In that last 5 years, that account is going to grow by almost $1 million. You will have only contributed about $20,000 more to it, and you're up to $208,000 contributed over that 40 years. But now your account is worth that just over $2.5 million. And if you have lived off of $52,000 for your entire life, $2.5 million will probably leave you set for the rest of your life. You'll be able to send your kids through college. You'll be able to probably retire however you would like to retire, all from contributing $208,000 over the course of 40 years, but with $5,200 every year. If you leave that in there if you don't touch that money for whatever reason, and you add no more contributions to that, you leave it in there for another 5 years, your account is now going to be worth $4 million. That's just a hypothetical, because probably you'll need the money that you have saved in that account to retire off of. But as long as you withdraw a reasonable amount, which most retirement experts say is about 4%, which on this $2.4 million would be somewhere around 100,000 just off the top of my head. So you would be living on twice the amount of money that you were used to getting, and your account will continue to grow essentially forever over time until you either spend it or leave it to your heirs. Now, I can see you looking at me through your screen and you're saying, Mike, I don't want to wait 40 years. I want my millions now. And that's a reasonable thing. People want their money now. It's tough to have a 40-year outlook on this, especially when you're, if you're my age and you're 37 and you're like, well, I'd have 2.5 million when I'm 77, but I'd, rather have it a little sooner. How do you get there quicker? Well, the biggest thing to do is, if you're 18 right now, is to start now. The earlier you start, the quicker you're going to get there in your life. It's still going to, on this thing, it's still going to take you 40 years. But that 40 years would now put you at 58 instead of 62 or 65, or for me, 77. The best thing that you can do, other than starting earlier, is just invest more money. If you just want to simply cram money into easy to use index funds that just grow at a predictable rate over time, and you don't want to try starting your own business or investing in real estate or anything else that takes a whole lot more effort than just clicking a button and investing in those index funds, you just need to put more money in there. And I like to use the Money Chimp calculator on the internet. That'll allow you to put in whatever parameters that you want to see how much money you need to put in to get to your goals. That's the Money Chimp is the little chart that I've had up this entire time, and I've used it in other videos. Investing in stocks is a wild ride. Even if you're investing in index funds, those are all stocks that those index funds invest in. There will be crashes, there will be corrections, there will be times where your account value might lose 20, 30, 40, 50%. Just as recently as 2008. The thing is that the stock market always goes up over time. We are well above all of those disasters in the past, be it the Great Depression, be it 9/11, the coronavirus panic that we had. But you do need to be prepared for a wild ride and be able to hang on to those stocks and those funds and not sell them while they're down and lock in their losses and continue to invest even when the world is falling apart around you. You just need to stay the course and trust that the past is going to be representative of what the future is going to be. You also need to fight that urge to spend it early. At that 20-year mark, when you got $327,000 burning a hole in your pocket, it is very tempting to take some of that money and buy some cool stuff, things that depreciate in value instead of appreciate in value. If you do want to take that money and you want to buy a piece of real estate for investment purposes, if you want to start a business, that is something that you can do that will continue to keep going to those millions of dollars that you're looking for. But if you take that money out and you purchase consumer items that depreciate in value, that is going to derail you from your goal of $1 million or more at the end of your working career. So that's just being disciplined. That's being disciplined with your contributions, with not spending it, with being able to control your panic when the markets are crashing. And then there's one other thing that we completely discounted for this entire example, is that you're not likely going to be making that same $52,000 for the entirety of your life. So if you would just take that 10% that you're putting in and just continue to put in 10% of whatever you're making, you're going to get to that end goal faster. Especially, even if you just get, like the 2 to 3% raises every year, you're going to get to that end game faster. But if you get promotions, if you change jobs and end up making more money, if you did take on a part-time job or whatever, those are all ways that are going to get you to that million plus mark at a much faster rate. And I don't think that in over 40 years, anyone is still going to be making the same amount that they made 40 years prior. Even if it's not a whole lot, as wages don't grow terribly fast and inflation does eat up a lot of that, you will still be making more than you did 40 years ago. So I hope that gives you guys some motivation to get out there, open these accounts, invest your money so that over time, small amounts of money can add up and compound to huge amounts of money, and your money can be working for you instead of you working and trading your time for every dollar that you need to not only survive, but thrive in the world. If you guys like this video, be sure to hit that thumbs up button for me. That really helps out this video in the YouTube algorithm. If you haven't yet, be sure to subscribe to this channel to grow your wealth, increase your success, put you on the road to financial freedom. I appreciate you guys watching today, and I will see you on the next one.